A strong improvement filtering through here from 44 index points recorded in the survey in January to now 54 points. Just how much good news is this, though, where we know that both December and January's numbers were susceptible to seasonal influences? Just how much do we read into today's numbers?
I think there's something to read. If you look at the figures, you'll see that it's actually a bit higher than it was in, say, November and so on. So it is a more positive trend. But one must just, the scope of this survey is a very broad in terms of trade conditions. So it includes wholesale, retail, business-to-business trade and that type of thing. Therefore, the high seasonal factors you have during December, January. And I think the figures in December, January still reflect some sort of muted retail trade. Consumers remain under pressure, but I think the positive news we see here is actually business-to-business trade. That is actually boosting the trade conditions to quite an extent. And of course, restocking, building inventories, I think that is also positive in terms of the index at the moment. So it's not really the final economy that's now really starting to move. It's actually in preparation of where we want to be.
Well, I guess important to emphasize is that this is also the fourth consecutive month that we are seeing the index well into positive territory, and one would assume illustrative to an extent of the kind of sustainability to this trend that we're seeing. Yeah,
I think one could say there will be more sustainability. I mean, the last time we were around, I mean, it was really good movements and the economy really raced ahead. So I think one would would like to see this more solid base that you depart from and to have it more sustainable over time. We can also see it in terms of Europe, the United States. It's also still uncertainty to some extent, but I think the whole scene has changed. Credit is not that easily available anymore. So you must earn sort of a good standard of living or wealth, and from there you can expand your economy.
If we go into the various indices that make up this entire index, I mean, you mentioned restocking, but let's look at the major influencing factors here. I mean, we've seen sales up 15 index points, new orders up 8 points as well, a sign that the economy is slowly starting to pick up. But what's interesting is that the inventory index increased only marginally, suggesting that restocking may have slowed for now and possibly reflecting the uncertainty that is still well out there in the economy with regards to the pace and the strength of that economic growth moving forward.
I think that's correct. I mean, especially in terms of the restocking, the pace there is not all made out to be, say, 3 or 4%. I think the Minister of Finance indicated a 2.3% GDP, which I think is quite a realistic figure for the moment. That is a bit on the cautious side, but I think rather be cautious and let people prepare on a solid base than actually create sort of expectations that can't be fulfilled. We've seen too much of that perhaps, and we must realize, I mean, the economy is about scarce resources, expanding on that, getting employment first going, and from there actually your consumption expenditure. It's a much more solid base than just extending cheap credit to people and let them get into trouble later on.
Despite this tentative context, though, I mean, we've got the index on selling prices ticking higher. To what extent is this a result of higher input costs here, where inflationary pressures are still there and obviously are going to see see more under pressure with the ramp up of electricity costs moving forward?
Yeah, no, I think definitely, I mean, it's more from the cost side. We know demand is very slack at the moment, so it can't be the demand push type of factors, but definitely cost. The diesel price, for instance, it just goes by, but one must remember it's now at the moment 15.1% higher than last year. So then that is quite a part of the package in terms of consumer prices, wholesale prices especially, and then of course the electricity. We know the direct cost will be around about 24%, although some industries might have special deals with Eskom that might not come to that. But still, on the other hand, there's a lot of indirect effects that comes through in terms of all kinds of goods you buy, because electricity makes up, in terms of the intermediary inputs, a very large percentage. Yeah. And that's important, I think. So we really don't know. We won't see it now. We'll probably have to wait until the middle of the year and so forth.
Richard, having said all of that, does it come as a surprise to you then that when it comes to inflationary expectations, it's declined there, and in line with that we've seen selling price expectations decrease as well?
To some extent it is. I mean, but I think, you know, this is perceptions, and the perceptions can change. I think, as you know, I mean, there has been a lot of talk about electricity. We don't see it yet into the pipeline in terms of prices. It's still to come. And I think it'll hit you like a heat wave to some extent, when it really hits the sort of cost structures of, especially small, medium-sized business who can't negotiate special deals and that type of thing. I mean, it will have an impact. And to have one of your components increasing by, say, 25% for 3 years on end, and of course that component then becomes a bigger part of your cost. The weighting is changing. That'll change your PPI, that might change inflation for consumers. That's a bit worrying. Your weight stays the same, but actually relative, the price of electricity will move rapidly against all other goods.
Well, with that being the broad playing field, then let's look at employment condition. I mean, jobs are a key focus for government right now. Are we seeing a correlation between the data today and what's happening on the ground in terms of employment in the country?
It's difficult to say. This figures, I think, is to a large extent distorted somehow by what is coming up in terms of World Cup 2010 and so on. So if we're looking ahead, for instance, in terms of the good figures, we see there 57 in terms of, you know, 50 being the benchmark figure. Then 57 is a very good figure for employment, but still I think there we might see the expectations from the World Cup in terms of trade especially. And of course then there's a little bit of an aftermath to sustainability. Perhaps there's something in here in terms of a higher growth rate towards the second half of the year in terms of the economy. But that is a bit on the risky side.
Just very quickly, Richard, I mean, you mentioned the Soccer World Cup. Should we be expecting to see a spike over that period and then an extreme pullback once that event has come and gone?
I think one will see a spike. One must remember, say 300 new consumers comes into and buys stuff. Definitely it'll have an effect, a spike into your figures, and it'll slow down afterwards. But there might be some of them staying a while and so on. So it might smooth out a bit. But it definitely will see that, and it will be positive to business. The point is, don't create expectations for 2011 and that and so forth on what's happening in the middle of this year.